value commodity moving forward for the next 25 years is not going to be gold. It's not going to be Bitcoin. It's not going to be silver. It's going to be carbon credits. If you're a young person, if you're the Frank Curzio of 25 years ago or the Marin Katusa of 25 years ago and you want to make a substantial net worth, start exploring on how to get into this game of carbon credits. This sector is going to dwarf oil. Oil is the biggest sector on the planet at $2.1 trillion a year. Okay, it's like 5% of the global GDP. Carbon credits. You look at what is happening so far of the 5,300 publicly listed North American and European companies with over $1 billion market cap. About just under 9% of them came out with a plan to offset their carbon footprint and a plan to come out with carbon neutral or net zero future by 2030 or 2050. That's less than 10% of the companies. Half of them have to report their S1, which is a scope 1. Frank, in 5 years, the regulators are going to make where your carbon footprint is a liability. And there's a huge growth of opportunity. Companies like Chevron, Shell, BP, Exxon, they're scrambling right now because their cost of capital is too high when the green bond market is the biggest growth, 60% year over year since 2013. And they know they have to go neutral. But how do you go neutral in this? It's outperforming Bitcoin. It's outperforming carbon credits. It's outperforming every commodity on the planet. That's carbon credits. And it's going to continue to go higher. Why? Because it's the ultimate Giffen good. Giffen good is essentially it's non-replaceable. And as the price goes up, the demand for it goes up.
Hey guys, welcome to Market Uncharted. Incredible presentation by Marin Katusa about the carbon credits trade. As he said, and I fully agree, if you are a young investor, you have ahead of you a lot of time. This can get a really cool opportunity for the future. Basically, this video, I want to present what is carbon credits, take a look on the past performance and what can be for the future. And we will end up with a few ETFs that can help us get exposure to this opportunity. Once again, don't forget, I'm not a financial advisor. I'm just trying to point out a few opportunities in the market. So first of all, let's clear that ESG fever is here. All the green bonds out there getting issued, and they are getting a lot of attention. A lot of money is flowing in, especially since 2018 with all of this ESG around us. Most of the funds truly just change their name to something like ESG or green and become immediately a green bond or a green product. So be careful out there, but still it's an amazing change that we are seeing in the world of investment, and we can take advantage of that. So let's just try to start with what is a carbon credit. Basically, it's a permit that allows the company that holds it to emit a certain amount of carbon dioxide or other greenhouse gases. One credit permits the emission of a mass equal to 1 ton of carbon dioxide. This is what is so-called a cap and trade program. Companies that pollute are awarded credits that allow them to continue to pollute up to a certain limit. And the exchange of these credits happens most of the time. As you've seen the previous examples, Tesla sells their emission credits to other companies so they can continue to produce. The amount of capital that has and will continue to be deployed into carbonomics sector is mind-boggling. It's the hundreds of billions and will reach trillions, as we just heard Marin Katusa. But few of the corporations that have committed to reducing their carbon emissions. Just here an example that Shell will need to cut their greenhouse emissions by 45% by 2030. It's not the only one, as you just heard. So let's pay close attention to these next three lines. It means that Shell needs to buy over 100 million carbon credits a year for the next decade. Let's put that in perspective. In 2020, 223 million voluntary carbon market credits were issued. Read that again. To meet target emission cuts, Shell would need to buy 45% of all the voluntary carbon market credits issued. Last year, every year for the next decade. And Shell is just one of the companies. You have thousands around the world. So that's why historically you can see the movement of the carbon credits, the carbon price. It's going up, up and up. And I believe, as well as Mari Cantuza and others, that this can continue to be a trend since the Paris Agreement, and we will continue to see a really up on the price of the carbon. And the demand also for carbon credits will continue to increase. Here we can see by a factor of 15 by 2030 and a factor of 100 by 2050. So again, this is a long-term trade. This is not a get-rich-quick scheme. Of course, this is something that you can see that the world is changing and you can take advantage of that. Here again, Marin Katuza saying that carbon credits are on track to hit 1 billion in transactions this year. 2020 volumes were 80% higher than 2019. So I think this can be a clear show of the trend of this sector. The IIF sees huge potential for voluntary carbon credits, predicts 100 billion a year market by 2050. And to compare a little bit the asset class returns, you can see that the EU ETS carbon credit futures are up 680%. It's unbelievable. And if you compare for other commodities such as gold or, for example, Bitcoin, which is a trending product that everyone is talking about, you can clearly see that carbon credit outperforms significantly any other investment. If you put into perspective, a 3-year commodity performance gets even more clear. And talking about a little bit how to get exposure to this, how to trade these carbon credits, I did my own research. This is the 2 ETFs that I found out, the KRBN, Brain Shares Global, also the GRN, the Barclays ETF, also about carbon credits. Again, this is a trend that is really strong, especially since the emission of these ETFs. They can't just stop rising. They are in all-time highs, and this is not easy or sustainable as a trend. So what I would say, any type of corrections in these ETFs would be a good opportunity. On this KRBN, I have my limit order pending at $36 per example. And here on the GRN, similar to this, my pending trade to buy is at $20. So still a little bit, not, or in this case, not so close, but I'm always a buyer on corrections. I'm not going to buy at all-time highs. On the other hand, I don't want to lose the opportunity, but just an FYI, how do I trade? Also, the medium of 200 days, also here at 1810, seems a pretty much a good entry point, not only for the short period of time, but also on the long run. So guys, thank you so much for watching this video. Never forget, knowledge is not power, knowledge is potential power, execution is everything. This is a great opportunity, but we need to play it safe as well. And don't forget, just like the markets, we will not rest.